You can't feel the recession yet, you will soon. Mortgage rates have jumped sharply in the last few weeks. Inflation's out of control, gas prices are high, and the mortgage and real estate industries are taking huge layoffs. So, of course, everybody wants to know, should they wait on buying a home? I mean, do I wait for home prices or interest rates to come down? Well, if you wait for home prices to come down, you might be waiting a long time. But Brian, what about the recession coming? Won't home prices come down? Check out this chart. Only once in the last 50 years and 7 recessions have home prices come down during a recession. And that was in the 2008 bubble, where the housing crisis caused the Great Recession. So if you're waiting for rates to come down, which as you can see from this chart, 7 out of 8 recessions over the last 50 years, interest rates go lower during a recession. Think about what that's costing you. If you buy a $500,000 home, put 5% down, and your home appreciates just 5% in a year, that means you got $25,000 in equity growth. Let's say you waited 1 year and you got a 2% lower rate. However, with the home now costing $525,000, your loan is now $498,750. So now you have to pay back a bigger loan. But that means you avoided that 2% rate difference on the $475,000 during that year. Sounds good, right? Well, that means you quote unquote save 2% on $475,000 or $9,500. But what did it cost you? If you would have bought the house and paid the extra $9,500 in interest with 5% appreciation a year, you would have made $25,000 in equity for a net gain of $15,500 on your $25,000 down payment. That's a 62% gain on the down payment. Now, of course, this doesn't include closing costs or any promises of interest rates in the future. I mean, the reality is there's no guarantees of anything. But I think it's just really important to look at the cost-benefit analysis using numbers that you're comfortable with using before you decide whether or not to buy a home now. I mean, plus, if rates do come down in the next few months or a year, you may be able to refinance to a lower rate at that time, but you started gaining equity now while you waited for better interest rates. Just don't make the mistake of waiting to buy a home to try to time the interest rate market. Any good financial advisor is going to tell you not to try to time the market when you invest. You find a solid investment like real estate, you buy it for what's fundamentally good about it, and then ride it out for the long term. Interest rates aren't permanent. Buy now while the uninformed public has put their home buying on hold, and you'll have less competition. You'll get a better deal on a house because you probably won't have to outbid anybody, even though your interest cost is higher today. There's a high likelihood the interest rates will go down sooner than later. So if you want us to do a cost of waiting analysis with numbers that you give us so that you can see what the numbers are for your situation, just reach out. We're happy to do that for you. So that way you can make an informed decision that's right for you. Make sure that you subscribe for more real estate and mortgage tips and ask any questions in the comments, and I'll make sure to answer them for you.